Could the trade wars hurt home prices? Well, we're starting to see some cracks in the housing market. The FHA mortgages, and they do generally your higher risk mortgages, like low down payments, higher risk borrowers with lower credit scores. They're having some problems here that we're seeing, that the delinquency rate is actually increasing on these lower end mortgages.
Yeah, and I'm not going to say that the sky's falling and we need to be worried about this, but there's always going to be cause for concern. You can find any fact that's going to be troubling, but it doesn't mean it's not worth watching. And the delinquency rate for FHA currently stands at 11% according to the Mortgage Bankers Association, and it hasn't been at this level for 12 years. So again, I'm not going to be like, oh my gosh, we're going to have another 2008, 2009. It's terrible, but it is a little bit concerning.
It's something you want to look at because of the fact it is an indicator, and you want to start watching it and see. And what we talked about is that this has been caused by people stretching themselves too far financially. And we talked about this back 2-3 years ago, where people, I got to buy a home, and doing the same thing they did with gold. Well, home prices went up 20%. I'm missing out. I've got to buy that home. And they would, scrimp and save, leverage, do whatever they could to get that home. And now there's some problems because they're not getting that growth as before. And I saw this back in 2006, 2007. I said, be careful. And I'm not predicting 2008, but I'm saying as a individual homeowner, as an investor, do not get yourself so tied up in debt to get into a home.
Yeah, and I think it is something that is a misconception. And I mean, I'll tell people, I bought a home here recently, and I'm going to tell you right now, I did not buy the home because I'm like, I'm going to make all this money off of it. I view buying that home, frankly, as an expense. I bought that because, I have a daughter and then another daughter on the way. And I'm like, I needed more space. I needed a little bit more of a yard for my
and
daughter.
You're going to have 5 kids, you said, right?
I mean, that's the plan. So I'm like, I needed more space, and it was just getting too hard. And especially renting, you're like, I can't really change things. So that's why I bought a home. I'm going to tell you, I don't even think my home will go up 10% a year or anything. I'm not like, wow, I'm going to make all this money. It's great. But I think that's where people kind of make a big mistake on it, in my viewpoint. And the thing that you look at, as you kind of said, is especially considering that home prices really appreciated very heavily in 2020, 2021. I think 2022 was okay, if I'm not mistaken. But really, it was 2020, 2021 that you saw the big ones. But now people that have purchased the last couple of years, they haven't seen much of an increase in the equity of the home. So what that means is after fees and commissions, they may not have much, if any, equity built up in that home. So if they went to sell it, it could be a big problem.
Yeah, and that's a problem. And the other thing, too, the builders are getting a little bit worried. I looked at the builders, and they've not seen this many homes sitting in lots with no buyers since 2009. And there's things that they can do, but these are just small things. And what we're trying to do is warn people from taking money out of your 401k for a down payment on your home because you're thinking you're going to do well. And we've unfortunately seen people do this, and then they don't have the 401k. The home is not doing very well. They moved to another state. I mean, it gets so complicated. You've got to slow down and think before you make an investment in anything, including a home. It doesn't always go up all the time.
Yeah, and I mean, kind of to that point with the home builders, is I was shocked by this number. I mean, I actually didn't see this until today, but the average incentives for home builders is usually around 5% of the total value of the home, but we are starting to see some incentives around 13% from big builders like Lennar. So, I mean, they're trying to push out that inventory because it's very costly for them to hold essentially a home that is not sold on the market.
Oh, yeah.
So it's much more beneficial for them to say, okay, well, we'll give you more incentives to get it off of our inventory books. Right. So, I mean, that to me is a little bit of a red flag of where we're at in terms of demand for homes. And actually, we saw existing home sales come out, and they were actually the slowest March pace since 2009. So, I mean, we are seeing some red flags. We are seeing inventory increase back up. We saw inventory rise by about 20% from March 2024. At the current sales pace, it's about a 4-month supply. I don't think we've seen that type of supply in years, frankly. Right. 6 months is considered balanced, so we aren't still quite there, but gosh, I mean, things are definitely changing a little bit, to say the least.
And then the last thing that's causing a problem in the home market is the volatility of the 10-year Treasury, because you're trying to lock in a rate. Well, the 10-year Treasury, which mortgages are kind of based off of, has been from 4.2 to 4.5, 4.6. So you start playing that game, and then you miss it. That's causing problems because people say, well, I'm just not going to do it. I'm going to wait till rates come down and stay down. So that's causing problems as well. So be careful if you're looking at buying a home. Again, as Chase did, you want a home to raise your family. You're going to be there for a long time, fine. But do not buy a home and do not stretch yourself or leverage yourself so much that you have issues.
And I want to be clear with people. I don't foresee home prices falling 30%, where it's like, I've talked to people, I'm going to wait until home prices go down 30% and then I'm going to buy. I'm like, I don't think that's happening.
Did you say 3 or 30?
30. Even 20%. I really think the base case that I have is just limited appreciation. I don't think you're going to have a big pullback. I just think it's going to be much more limited growth on home prices going forward.